This is the exact moment a trader's heart starts pounding. This is the get big signal. This stock, BYND, had its market cap 12x in just 2 days. It was a hot potato game with billions of shares flying around. But on day 3, the party ended. I'm going to show you the exact setup we used to short this, from the plan we made before the market opened to the precise signal to get aggressive. First, you have to understand why this was the best short of 2025. This wasn't a healthy company. BYND was on the verge of bankruptcy. To survive, they did a debt for equity swap that quadrupled their share count. They diluted shareholders by 80%. The stock collapsed from $2 to 50 cents. That is what a fundamentally broken company looks like. It was left for dead. But then the meme stock mechanism kicked in. On October 20th, the company announced a legal victory. That was just enough of a catalyst. The Wall Street Bets crew took notice and the frenzy began. On day 1, it gapped from 60 cents to over $1. It traded 1 billion shares. It closed on its highs. Our desk was actually long this day. On day 2, it did it again. It traded 2 billion shares and closed above $3.50. Think about that. A company that just 4x'd its share count also 3x'd its price. That's a 12 times increase in market cap in 2 days. This was a classic hot potato trade, and it was getting very, very crowded. This brings us to day 3. This is one of the most popular short-term trading patterns, selling a third day gap up after a huge run-up. The risk to reward was finally shifting to the short side. Here's the game plan I tweeted that morning. The key level was $7. I called this the inflection point. The rule is simple. If it stays below 7, the easiest path is lower, and I'm looking to get short. If it trades above it, I stay away. Now let's watch the tape. This is where the magic happens. We got 3 distinct signals that buyers were exhausted. Signal number 1, at 10:30, it pokes above 7, the inflection point, immediately fails. This is a look above and fail. It's my first sign that buyers are exhausted. Signal 2, for the next 25 minutes, it just sits under 7, it can't reclaim it, it's heavy. This is confirmation. And signal number 3, the sharp break of 6. This was the signal to get big. This was the break of consolidation. Sellers were in control. It was also the first time it was holding below VWAP. At this point, we're in, we're sized up, and the psychological pressure shifts. Now, it's not about if we're right, it's about how much we can make. So, where do you take profits? You must have a target. The best practice is to zoom out. The most obvious high probability target was this. The gap fill from the prior day's close just below 4. This is one of the most common spots for a stock to bounce. So, as a firm, we were out of almost our entire short position right into that $4 level. And look what happened. It bounced almost $1 from that exact spot. My job as a short-term trader isn't to hold this short to 0. My job is to capture the high probability part of the move, control my risk, and